let's talk taxes, okay? And I'm going to go from let's go with the basics and then a little bit more, maybe middle of the road, teach you a little tips, some tools. And then we're going to go and dial it up to 11 with a little bit of spending game background give you some tips and tricks on those pieces. Okay. So let's start out in the very beginning and let's go in our 10-step launchpad. So just in the software, clicking on 10-step launchpad right here, going to bring up our major tool where we kind of can start every conversation. I'm going to click on the show tools button down here, and then I'm going to go right into the allocation mix. So this is a step 9 tool where we're helping someone think about how would you ideally want your circle of wealth allocated. And this allows us to talk about both risk and taxation. All right. I mean, a lot of people don't understand the basics of these 3 tanks. They don't understand that they've got money that is either in taxable accounts, tax postponed accounts, or tax advantaged accounts. Those are the 3 places they can have money. When I was doing public seminars, part of my RMD seminar that I did was really just teaching people this. And for them, that was like light bulbs were going off. So with Circle of Wealth as an advisor, we sometimes take for granted what we think to be very simple concepts. Other people, it's brand new, okay, because the amount of or level of financial literacy out there is not as high as I think any of us would like it to be. But if we get to the taxation options, I want to make sure you understand that you can click, if you click on the actual tanks. So I'm right here. I'm going to go through. If you click on a tank, all right, so right now they're filled up. If you left click on any tank, the tanks come down and then you can fill in whatever percentages. All right. And the other thing you can do is you can click down here under common characteristics. So under taxable accounts, typically these are going to be after tax accounts. Okay. So, and then it goes through all the common characteristics. So this is stuff like sitting and checking, savings, CDs, a lot of times. You could think of taxable brokerage accounts. All right. So it just gives you a lot of the common characteristics of these types of accounts. Now, your tax postponed, this is primarily going to be your IRAs, your qualified plans, your registered plans. It gets a little bit more complicated because you could have some after tax, tax deferred accounts within your IRA, but really it's tax postponed. So you are getting a tax break to put the money in, and then when it comes out, you'll pay all the taxes. Okay. And then your tax advantage, well, you're taking after tax money, putting it into these, it's growing up, and then you're going to get to access money in a tax advantage / income tax free manner. The way I go through this with folks is I would say, so if you could wave a magic wand in a perfect world, understanding where we're at currently with the tax base and where we're at with things moving forward, if you could wave a magic wand and just move the money wherever you wanted, how would you want it to be? Down here, it allows you to go for the client, for the spouse, and then a combined section. So if we said the client was like, I don't know, let's do, say, well, I want 10% sitting over here, and I'll do 20% there, and it leaves 70%. And if you put over here, click on the spouse, and then the spouse wants, I want a little bit more liquidity, and I'm okay with that, something around there. And then you go to a combined picture, and it'll kind of marry the two together. Okay. So this is really, I would say, a great place to start a conversation with clients. And again, it's not, how do I save on my tax bill that I'm looking at right now?